getting the kinks out this first meeting, but I'm very, really excited not only for this meetup, but also for our guest speaker. The reason why I started this webinar Zoom link was because when I was in the military, no one in my circle talked about real estate. They talked about, TSP. They talked about saving money and debt. Don't be in debt. And a lot of times I saw a lot of people, what they did was when they deployed, they came back, and you see a lot more Dodge Chargers and pickup trucks on the road instead of appreciating value items. So I wanted to change that. I wanted to have a meetup where people can learn about real estate, different niches in real estate. Now, primarily, it's going to be a lot more multifamily for this meetup than single family, because that's where I'm going towards. But I just want people to learn. So we're going to have a whole bunch of different guests on here with different niches on here, from tax liens, trailer parks, retired assisted living, fix and flip, wholesale, and everything. But for today, the reason I picked Joey was because Joey, I saw Joey last year on REA Live, that's why I met Michael too, Michael and Susie, and and he talked about VA loans, and VA loans is something that I wish I knew about when I was in, because I would have used that more than what I did. I only used my VA loan for the first time last year, and I've been out I was in 16 years and I've been out 5 years. So I wish I used my VA loan. I would have done things a little bit different, but I want Joey. I invited Joey to be the first guest speaker, and I just wanted him to talk about VA loans. This will be recorded. I'll put this on my YouTube page, and hopefully they can bring out to the masses. So Joey, I'll make you a host, because and this is the last time I already changed it already on my settings. So you'll be next speaker, they can be I can be a co-host for that person. So let me go to you and make you a host. You want to invite people in for right now. People still won't come in and stuff like that. So hold on. There you go, Joey. All right. So please introduce yourself.
Cool. Hey, everybody. Joey Abdullah. I'm out in Denver, Colorado. I appreciate the opportunity to be able to explain this tremendous benefit, whether somebody served in the military or not. I'm a huge advocate for education and financial education. A little background on me. I joined the Navy when I was 17, right out of high school. I had enlisted, served on a couple aircraft carriers. Then I ended up going to the Naval Academy and got my commission after I graduated there, served on a few more ships. Ended up as my last tour of duty here in Denver. I was the XO of the Denver MEPS. So most people that served, we all have our MEPS experience. And so it's kind of funny. We all start at one, and I get to end my career at one. And got a family, married to my wife, Lindsay, and I have two boys. They're 4 and 6 years old. And after I got out of the military, I just had a passion for kind of the financial services industry, and ended up in the mortgage world because I also kind of shared a passion with real estate. And this was a good way for me to blend the two together for sure, working in real estate finance. And it all starts with a single family home. I believe that most of the powerful wealth building potential that somebody has, it sounds like you guys are gonna have some great, series of speakers going into the multifamily commercial space. A lot of stuff honestly just starts with, you got to dip your toes in the water somewhere. And the ability with a single family home, a townhouse, even multifamily, 2 to 4 units in a residential setting is definitely a phenomenal way to start. So let me see if I can share my screen. All right. You guys see my screen here?
Yes.
Okay, perfect. I'm going to see if I can. Okay, perfect. So let me just make sure I can click through some of this stuff. All right. So VA home loan benefit. So that's me, Joey. I'm the VA loan expert. If I write it down, then that means it's true. So there we go. Belco Home Loans, where I currently work, we're a VA approved lender. We're not affiliated with any government agency, just like any mortgage company or bank that issues VA loans. We're not affiliated with the VA agency, but we are approved by the Department of VA to insure the actual loans. We're just a private company that made it our mission to educate as many veterans as we can about using the VA home loan benefits and utilizing it. So why would any company want to spend so much time and resources just, conducting this seminar? Like I was just saying a couple minutes ago, I got a huge passion for educating as many people as humanly possible on the wealth building potential of owning versus, renting for somebody's, entire career or life. And I've got a ton of slides on here that'll kind of get into a lot more of the specifics with some actual examples. And, if somebody's, whether they're on active duty still, if they're recently off, or if you've been retired for 20 or 30 years, just understanding a lot of this information is important. Just like anything in our world, COVID has changed, a lot of our industries. So I will caveat this, that I've got my contact info. That's my cell phone that's at the bottom of the screen there. It'll be on there throughout the presentation. And I'll send this presentation out to everybody as well, so they can just have a copy of this for reference. But by all means, please contact me. Even if you don't end up using my team and I, it sounds funny to say, but doesn't matter to me. I'd just rather you have the right information and be pointed in the right direction. So feel free to give me a call, shoot me an email, with any questions, concerns that you guys might have, whether it's a VA loan or any other type of residential lending. So we're going to go over a little bit of the who, the what, the when, the where, and the why today, specifically going over the VA home loan benefit. So again, why am I an advocate for this? I mean, there's a huge wealth building potential here. I had similar, aspect when I was serving on active duty, especially when I was in the more junior ranks. I really, really kicked myself for not using this benefit really until I was probably about 3-4 years away from retiring and getting out. So if I had used it earlier than that, I would have been able to build up a little bit more wealth a lot faster. So definitely an advocate for this benefit. So a brief history, 1944, a lot of service members were coming back from World War II, and Congress had passed legislation to offer a ton of benefits. The most notable benefit was the GI Bill. They got created out of the 1944 Service Members Readjustment Act, but also what slipped in there was the VA home loan benefit. And it was a very basic benefit. And one of the biggest issues were, there were a couple of big caveats. You had to be a World War II veteran, and there was a timeline when you had to be able to use the benefits, which brings us to 1970. The Veterans Housing Act extended that timeline. You had 6 years from when you left active duty originally. Now it made that an indefinite amount of time. A few years later, 1978, they adjusted it even further to not only be for single family homes, but for some multi-unit properties, manufactured homes, and condos. And 1992, the VA home loan benefit was actually expanded to not just folks that had served during a wartime, conflict, but it also extended it to folks serving in the Reserve and the National Guard. So lots of changes, but those are kind of the biggest milestones of the VA home loan guarantee. So how do I find out if I'm eligible for a VA home loan? This does change from time to time. The best place to always go is either the VA's actual website or just reaching out to a VA approved lender. But current as of today, these are some of the times if you've served during a quote unquote wartime event or a little over 6 months during a peacetime. Obviously, since 1990, we've been in a wartime environment since then, according to the VA. So anybody that's been serving or has served anytime recently definitely falls into the category that you're active duty. You're more than likely going to be eligible for that benefit. The Reserves and National Guard have a little bit extra scrutiny in terms of years and what kind of lists you've had to be placed on. Again, you can see 6 or more years as an active member. This kind of gets some folks caught a little bit. We have a lot of individuals that, they end up serving 5 years and are able to leave the National Guard or the Reserves early. And unfortunately, it ends up kind of dropping their eligibility because they do need that 6 full years of actively drilling with a unit. Honorable discharge, placed on the retired list, or you are continuing in the Reserves. Now, if you're active in the Reserves, you still would need to have that 6 years. There are times when somebody gets called to active duty where you're on, different sets of title orders. And that's still best to reach out to a VA lender to have them verify that directly with the VA to see if you're eligible, because some folks that get activated for a year or so with an active unit actually can bypass the 6 years. And then other eligibility scenarios, folks that are, that leave active duty or the reserves for service-connected disabilities, unremarried spouses of a veteran who has died while being in service, or a spouse of a prisoner of war or somebody that's missing in action. This is what the beautiful VA form looks like for your request for a certificate of eligibility. We call it a COE. Every lender has a way to do this electronically on your behalf. So, I'm biased towards just less paperwork. You can just bypass the VA directly and work with a lender that we would fill this out for you electronically. And, instead of you mailing it in and waiting for, 2 to 4 weeks, we'll get it back in about 10 minutes from the VA. We have a direct portal with them. So this is what the request looks like. And once it comes back, they'll verify, kind of a yes or no if you're eligible for this benefit or not. So who can finance a property with a VA loan? So a sole veteran, a veteran and their spouse, or 2 veterans. So you could have, somebody that you served with and you want to go into a longer term kind of investment scenario with that individual who is also serving. You could buy the property as your primary residence, the 2 of you, and eventually end up moving out and turning it into a rental. So that's relatively common for a lot of the younger active duty folks that want to kind of buy a bigger house and they know that down the road they might end up turning it into a rental. It does have to be an owner occupied, so you do have to live in that house for at least a year. What types of properties can be financed? It has to be a good condition, no tear downs, fixer uppers. Full permits have to be pulled on the property. We can't just, kind of jump into a house that's halfway finished, going through a gut job. So all the improvements do have to have documentation. And if it is a condo, this comes up a lot, the VA themselves have to approve the condo project. So if you are looking in the kind of smaller condo type scenarios, definitely reach out to a lender. If the condo is not currently approved by the VA, again, a lender that works with VA loans and knows what they're doing, they can work directly on your behalf with the VA to get that condo approved for VA financing. So why would I want to use the VA loan? Well, the biggest thing is less money out of your pocket, right? I'm huge on minimizing the money that goes into the walls of the house, right? I want to keep it in your pocket. And especially, right, we've seen with COVID and, just the uncertainty that can happen at any time. I'm really big on having liquidity, right? Just money in the bank is, to me, a little bit more important than having money in the walls of a house. I don't like taking on debts when I don't have to, but interest rates, as long as anybody's been, reading newspapers or watching the news recently, I don't care, the craziness going on or anything. We've all heard rates are low and they are, so money's cheap right now. And I'd say if you can kind of come in with little to nothing out of your pocket, that's definitely important. So the other big one is putting less than 20% down on a conventional loan, or really any other type of loan. You are required by law to pay for private mortgage insurance for any loan that you're putting less than 20% down. That's not the case for the VA. The way the VA works is they are actually acting as an insurance company for you. So your service is actually the PMI. So kind of cool there to minimize your costs. There's flexibility on paying closing costs and who has to pay for it. So a veteran is allowed to pay for them, but also the seller is allowed to pay for it. And the way the loan can be structured, a bank or the lender that you're working with can help offset the costs for you as well. So it's pretty flexible with who actually has to pay for a lot of the closing costs. This is truly the only loan where you literally could bring $0 and get the keys to a house. So that's pretty cool in the flexibility of it. The funding fee, these are just some terms that we use. That's a one-time fee paid to the VA. We often finance that into the loan. Now, depending, and I do have a couple of slides that will explain that a little bit further with how much that costs. If somebody's still active duty or if somebody's off active duty and they're not earning any VA disability benefits, then that funding fee typically is paid. If somebody has received a VA disability rating, then typically that funding fee drops all the way to 0 and you don't have to pay for that. The flexible requirements for credit, and DTI is our debt to income ratio. It just really allows a lender to take more of a risk because the VA is insuring the loan, your amount of a loan that you can qualify for compared to the income and what the mortgage payment is going to be tends to go up a little bit more than traditional loans. And currently, this is just kind of my company's stance. The VA technically doesn't have a limit, but most lenders out there are capping at $1.5 million, but still coming in with $0 to buy over $1 million house is pretty crazy. Two other types of loans. So you can use the VA to purchase a home. You can do a streamlined refinance. So it's refining from a VA loan to another VA loan, typically with just a lower interest rates, better terms. Sometimes somebody has an adjustable loan that they started with and they want to go to a fixed rate loan, or more traditionally it is just, receiving a lower interest rate. Or some folks want to pull out cash and do a cash out refinance. Now this is, a relatively recent change. The past year or so, the VA has capped at 90% of what they would allow you to take cash out. It used to be all the way up to 100%, and they've just realized that they want to mitigate some risk. They don't want folks over leveraging their home in case there's any sort of a downturn or anything. So as a protection, the cash out requirements have dropped down to 90%, but still tremendous opportunity to pay off bills, other debts, maybe finance, the ability to purchase more real estate, right? That's a pretty common one that I see a lot. So definitely a huge benefit there. So some myths, right? And don't have to be so interactive here. I'm going to have some question and answers after this, but I'm going to give you some questions that I tend to see my team and I, a ton. So a lot of folks think they can only use their VA benefit for the first home that they buy, and that's false. Once the VA loan is paid off, you can get another VA loan. Now, there are some caveats for how many loans you can have at one time with the VA, how many properties that you obtained with the VA loan, but it is false. You can only use it once. The specifics of using it in a subsequent manner, definitely reach out to me or any other lender to ask about that, but you can definitely use it more than once. The seller's not going to accept the offer because they've got to pay all of my closing costs, and the VA loan, it's a tough loan to get through, and I'm going to go with an easier conventional loan. Well, that's false, right? The VA loan has less stringent requirements, if you remember me saying that, and the seller, they're allowed to pay for everything closing cost wise for you, but they don't have to, right? It used to be a lot more commonplace that the VA loans would kind of push the sellers to pay those closing costs, but that's no longer true. I can only buy a house up to $240,000. I just throw a random number here. A lot of folks just think that there's a cutoff, and that's not true either. Like I was saying with our company, we can go all the way up to $1.5 million. Some companies cap it at $1 million, but it's definitely way more than $240,000. I can't use my spouse's income, and it's not even going to help if we want to use that to buy the house that we actually want. That's false. Spouse's income can be used just as long as it's stable, just like anybody else qualifying for a mortgage. I can't allow another veteran to assume my VA loan. Now, this is false. A vet that's qualified to use a VA loan can purchase the home from you. The only caveat here is if you end up selling a house that you've used your VA benefits on to another vet, they're not using their eligibility. They're still using your percentage of eligibility. So this could be good in an environment like now when interest rates are really low, where, a handful of years down the road, you might end up having a lot higher interest rates. And this is an option to, kind of transfer your better terms and rates of your loan to somebody else when they're buying your house. There's always a funding fee no matter what. False, like I was saying, there are ways if somebody is receiving a VA disability rating to not have to pay that funding fee. The down payment, it won't affect the funding fee. That's also false. If somebody puts down at least 5%, the funding fee drops pretty dramatically. And if they put 10%, it drops even further. So there are ways to reduce the funding fee if you do have to pay for it. I don't have 2 years of service, so I can't be eligible, or I don't think I have enough service. Again, reach out to a lender to see if you do have the eligibility, but there's not a length of time by that long by any means. There's a number of situations where a lot less, typically about 3 to 6 months of serving on active duty qualifies for the VA loan. So what's the VA funding fee? I took a snapshot here. This is directly from the VA's website, so it might be a little hard to see, but there's a little matrix that you can see where depending on your military service, the type, whether it was active duty, reserves, or guard, and then how much your down payment is. And also, is it your first time using the VA loan, or is it a subsequent use? Is this your third, fourth, fifth time using it? So the percentages of the funding fee and all of these numbers on here, 2.3%, 3.6%, all these numbers are, it's an amount, it's a percentage of the loan, I guess I should say. And we are able to add that directly to the loan, so it doesn't have to come out of somebody using the VA loan's pocket. So just a quick example here, funding fee versus PMI. These were rates from, a few weeks ago. This is just the power of using a VA loan. Conventional rates are still good, right? I tell everybody if there's a 2 in front of it, it's kind of great right now. But you got a conventional loan, 2.99, VA loan, 2.25. Well, if we put 20% or $20,000 down with the conventional loan, we're taking a total loan of $380,000. Our PITI, this is just the, what we're paying to the bank every month. We're going to say $1,600. PMI, that's that private mortgage insurance. That's $274 on this specific loan. So $1,874 is my total mortgage payment on the left side. And on the VA side, lower interest rate, I get to keep $20,000 in my pocket. Even if I had the ability for it, I'm going to keep it. I borrow a little bit more because this includes the funding fee here. My mortgage payment to the bank every month is $1,561 versus $1,874 total, right? Over $300 of a benefit, and I've got $20,000 left in my checking account that I can use for moving, furniture, anything like that. So definitely a value there. So let's talk about value. How valuable is somebody's BAH? Now, for like me, for like anybody else on here that's a veteran or retired, no longer getting the BAH. If you are still in, then you're lucky that you can still use the BAH. But how valuable is it? So this is back a few years ago when I originally started putting together these scenarios. But the key point here is looking at somebody's career. If they had used their VA home loan benefit and their BAH versus just giving it to a landlord and paying rent. So here we have somebody that started off as an E2 out in San Diego. Obviously, they rose through the ranks, got stationed a few different places, Honolulu, got stationed in Tennessee, and then back to Hawaii, out in Arizona, and then finished up their career 25 years in Hawaii. Well, the total over that time frame was $633,000, right? A ton of BAH. And if we take a look at that, $633,000 over that 25 years would have been the equivalent, because it's a tax-free benefit, would have been the equivalent of earning $833,000, right? I'm going to put the asterisks here a couple of times. You got to talk to the tax folks on all this, but that's the benefit or the power of your BAH. And if you are in, or if you have any influence of anybody that's still currently serving, or if they're listening to this, what could you do with the BAH entitlement? Well, most folks don't end up purchasing a house while they're still serving, mainly because of misinformation, or just they never come across a webinar like this. They never come across a group like this. They just never come across somebody that can mentor them through this. And this is a big one. There's just fear, right? False evidence appearing real. So I just want to throw this on here. And some other common things that we hear, houses are getting super expensive. I don't want to purchase. It's scary. It's nerve-wracking. Or I'm only going to be at this station for 3 years. Well, all right. Well, then how long are you going to be at the next station and the next station and the next station? Because you can purchase a home with a VA and, possibly turn it into a rental and then earn some income over your full career. Even if you just did this once, there's huge power there. And I always ask anybody that, kind of gives me those examples or excuses. Well, if you're not going to buy now, then when are you going to buy? Right. And the power here is leverage, right? So how does the real estate market compare to, let's say, the stock market? And it is leverage. So just to illustrate the power of leverage, let's say somebody buys a house for $500,000, a very expensive home. If that home increases 10% in value, that individual who purchased that home is now $50,000 net worth richer. If they had 100,000, which is a tough amount of money to save just on their own, if they just saved a bunch of money and they had 100 grand, they invest that, which is risky, all of it, into the stock market, they'd have to have a 50% return to earn the same $50,000. So first they got to save that much money. then they got to risk it all investing. VA loan, you buy that $500,000 house with nothing down, increases to $550,000. You earn $50,000 by paying your mortgage. The other one, it's just a lot tougher. So that's the power of leverage, especially with using the VA loan, with minimizing what you're putting into this. Some tax incentives, again, recommend talking to a tax pro on this, but stock market, long-term gains, you're paying 15 to 20% in taxes. Real estate, there's a lot of times that the mortgage interest is deductible. Property tax costs can be deductible. If you're married, up to $500,000 of the profits of your primary home can be, receive tax, with no tax implication, no fee there. If you turn this place into a rental or any properties into rentals, there's even more tax breaks. So tons of power to minimize taxes or not even pay them at all on the real estate side versus, if you invest the money elsewhere to try to earn income elsewhere. Some other tax incentives, here's an example for an E6, with their base pay, the total yearly income, owner occupant home, you can kind of see the taxable income before other deductions ends up being just a lot more favorable when they're getting a lot more of the tax-free income like BAH, BAS, all that kind of stuff. So, what would you pay in taxes on 8820 of income? So this is just saying that if they're receiving a lot of these tax-free benefits, it's nice that that doesn't have to go to taxes. You can use that money kind of anywhere else you'd want. So what are the steps to a successful closing if you are going to use a VA loan? And this is really any loan as well. So I'd say, select a company and a loan officer that you trust and that knows a lot about this benefit and just kind of the home ownership, and purchasing process. Get it fully pre-approved, not just pre-qualified. Now, what that means is getting a loan right now, it's pretty cumbersome. It's not difficult. It's just a lot of paperwork involved, right? We all know what happened back in 2008, big mortgage debacle happened. And because of that, a lot of seatbelts were put on to the mortgage industry to make sure that that never happens again. A lot of it is just documenting, your income, making sure you have an ability to repay the loan. And because of that, we recommend getting fully pre-approved. That just knows, that just goes into looking at your income, looking at your full credit, and looking at, the money you have in the bank. We call them assets. Getting the full picture to ensure that you're good for the loan versus a pre-qualification is anybody just going onto any bank's website, clicking a couple mortgage calculators, inputting your own information that's not verified. If they ask you, what do you make every month? And I say $10,000, it might give me an answer that says I'm qualified. But when they actually look at my pay stubs or how I'm paid, if I'm self-employed or just other types of income, maybe they can't actually use that amount of income and I wouldn't qualify. So a full pre-approval, a full underwritten loan is definitely more important before you end up going out looking for a house. Some of the items that you're going to need to gather when you're looking at buying a home and using the VA loan. So the certificate of eligibility, like I was saying, can be obtained by a lender, or you could, obtain that yourself through the e-benefits website on VA's portal, or you could mail that into the VA. Your DD-214 or your reserve points total sheet, your W-2s from the last couple of years, bank statements, tax returns from a couple of years, or the past 2 filings, bankruptcy and divorce decrees, if those are applicable. And then, your most recent 1 month of pay stubs or your LES if you're still active duty. So the lender, the bank's going to run, a credit report. They're going to run a complete VA loan analysis on you, and then you're going to receive what we call a computerized approval. It still then goes to a kind of a human being to verify everything by hand still, but that at least gives you the power to know that the income ratios work, the credit looks good, everything's kind of set that you will get the loan. You got a good, find a good real estate agent to find a home and make an offer on what we call a purchase contract. Now, a key thing here, if you're going to use your VA loan, I'll use Denver as an example. Denver has a couple small bases around here, but we're not like San Diego. We're not like Virginia Beach. Those are huge military towns. And so I say this because if you end up going to use your VA loan, I'd recommend working with a real estate agent that also is very comfortable with VA, because you want to be presented in the best light. Again, I'll bring up Denver as an example. Because we're not a big military town, sometimes VA loans kind of get pushed aside because it's not a common loan and some people are afraid of it. So you definitely need somebody that knows VA and the product pretty well, that they can be a strong advocate on your side. I work with a handful of real estate agents that also were, in the service, and they're definitely, along with me and my team, aggressive to make sure that you can get your purchase contract accepted and not scare any of the sellers away from accepting an offer. And this is kind of good for anybody. If you're going to buy a multifamily property, if you're going to find a commercial property, find the realtor you're going to work with that honestly is just like, they're the badass at that product, because it's just going to put you in the best possible scenario. So the seller accepts your offer, and then you're going to complete that's when we have an official loan application, because the last piece of a full loan application is having an actual property. And so once that all happens, you'll end up getting a list of disclosures, and the loan process officially starts now that you're under contract. We then send the loan to get processed, and it just ensures that we have all the documentation necessary. If you went through a pre-approval and we saw some bank statements and pay stubs, but that was maybe 3 or 4 months ago, some of those expire. So they'll just make sure everything's current and we have all the right information so that the underwriter can approve the loan. An appraisal is also done by the VA. It's an approved appraiser. They're out there to check the value of the property. They're on your behalf to make sure that if you purchase a house for $350,000, that's actually what the house is worth. You're not buying a house that's really only worth $300,000. So they're there for your benefit. So the VA appraiser heads out there, and they're going to review, the local comparable sales in the neighborhood, and just ensure that what you're paying for the house is the fair market value. The loan officer, the lender, will receive what's called an NOV, a notice of value. That just shows that it's a complete, finalized value that the VA is accepting for that property, and the lender accepts it. And that just finalizes the loan requirements. And then we get the underwriter's approval for your, your full, what we call a clear to close, or when your loan is officially ready to fund. And then closing, is scheduled by your real estate agent. That's where you'll sign, the 10,000 pieces of paper to get the keys to the house. Very exciting day, very stressful sometimes. But it's definitely a gratifying thing once you get the keys to that house. That if you've never bought a home before, it's a huge day, and it's a very gratifying feeling. And most lenders, a lot of times folks are scared with the VA. Like I said, this process, because a lot of this is automated, we can definitely close in 3 to 4 weeks what used to take 2 to 3 months sometimes. All right. Hopefully this was informative. Hopefully you got a little bit more out of this than expected. Again, this is a big overview. I'm going to turn it back to having us all be able to chat and see if you guys have any specific questions. All right. So thank you, guys.
Thank you.
I don't know how to give you back the control.
Yeah, please. Everybody have any questions for Joey?
Joey, I have a quick question. This is Ricky. Basically, I have my father's a 100% disabled veteran living in Montgomery, Alabama. Can he actually go on your website as well and kind of talk to you? Because I have been talking to him for quite some time about using his VA loan, hopefully moving up here to Washington State from Alabama. But is that something that we can do?
Yeah, and I'd always recommend, this is a small enough group. I'd say, and if we don't have it on here, I'll just make sure it gets sent out, but have him call my cell phone directly.
Will do.
And I just think that's easier. I'm definitely somebody that can, I'd rather get on a phone call and kind of just get a little bit background story, see what he's doing, and give a little bit better advice that way. We've got a ton of information, on a website. There's a ton of VA websites as well, but I'd rather kind of get to the specifics of the story. And I'll give an example, because I do work with a lot of investors that do utilize the VA loan kind of down the road. And there's just a lot of bad information out there. And then now we start talking about, we started with a VA loan. Now we want to mix it to a couple different types of loans. Maybe I want to then buy a house down the street with an FHA loan. Maybe I then want to turn my VA loan that I started with to a conventional loan, and then, get stationed in another state, and so as you move around and not just physically move, but as you transfer kind of how the loans are structured with the specific place, it ends up being better just for a phone call, just to iron out some of the details. Because that's something that, I'll toot my horn here. There's just so much bad information. Everybody on here, just reach out to me directly. Sometimes I get long-winded on a phone call. If I don't answer, just leave a message. I'll always call you guys back. And that's probably the best thing that I can say is, if you guys recommend, or you hear anybody talking about it, have them give me a call, or have them call really anybody that they trust. But because of the nuances with whether it's VA or, with a disability, the percentage, because a lot of times with the 100%, there's even extra benefits, with taxes and insurance. And there's some things that you just might not have asked.
All right.
So anyway.
But thank you very much for that, Joey.
Oh, of course. Thanks, Ricky.
Hey, Joe, this is David Peterson. I had a question for you.
Yeah.
I know, I think it's with an FHA loan. I've heard you can buy like up to a quadruplex, up to 1 to 4 units if you own or occupy one of those units, and get a loan for that. Does that also apply for the VA loan, or is the VA loan for single family only occupied? Or
So no, great question. So can you buy a house that's more than 1 unit with VA? And the answer is yes. Same caveats up to the $1.5 million with my company. And again, that's around as high as I've seen. So you can buy a house, a fourplex. Now, what ends up being more of the issue is that's a big payment, right? I buy $1 million house. I mean, that's a scary mortgage payment, right? So what the VA allows some folks to do, and this is where it gets a little tricky, where definitely a specific, case-by-case basis, the VA has specific guidance on if we can use rental income from the other units to help you qualify. And sometimes it's easier than others. There's other requirements for money you have to have left in the bank after you close. We call those reserves. So specific questions like that, but the VA loan can be used up to 4 units.
Okay, great. Thank you.
Hey, I've got a question, Joey. Say it's kind of a caveat off of David's question. Say I'm trying to buy a fourplex and I don't have the cash reserves for that. Is it possible to have a co-signer on that deal using the VA loan?
So I know there was the one slide that was a little odd on there about types of folks who can buy a house with VA. So the VA, I said it a couple of times in the presentation, the VA is acting as an insurance policy, insuring the loan, right? And so the number that the VA is insuring is 25% of the loan. So for easy math, if I buy a $400,000 house, the VA is insuring $100,000. So the banks love it because the bank gets to collect interest on a $400,000 loan, but they're only risking $300,000 of their money. It's a perfect scenario for a bank. Now, if I buy a house as a veteran and I have somebody else that's co-signing, like you were mentioning, that's not a veteran, the VA is only going to cover my portion of the home. And so since the VA is covering 25%, the VA would cover 12.5%, so half. So you can use you could have somebody on the loan with you, but you'd have to put 12.5% down is the quick answer there. More case-by-case type stuff ends up happening, but that's the quick way to look at it. Now, if they're a veteran as well, then it's a veteran loan, and then you're fine.
Okay.
Or your spouse. Your spouse counts as well. The VA loan is the only loan that you have to be married to have 2 people on the loan and not do the vet loan. Like your spouse doesn't have to be a veteran.
Okay. All right. Thank you.
Of course. And that's a great question. That comes up a lot. I don't make as much money, or I don't have the reserves. Now with the reserves, again, this is case by case. We have to talk about the specific scenario, but reserves could also, if they're not on the loan, like if you qualify by yourself for the loan, reserves could be a gift, right? A family member could give you the money, and then that'd be fine.
Kenneth, can you mute, please?
Hey, Joey, I kind of had 2 questions for you. You kind of obliquely mentioned it a little bit earlier, but like in regards to transitioning from a VA loan to a conventional loan, how would that process work? Would you have to then So say if somebody was refinancing on a primary from a VA loan to a conventional, would they have to give the 20% down that you traditionally do with that? And then two, this is on me. I should understand this kind of the cap better, but now that they have transitioned from having the limit on the amount of money that you can spend on a VA loan, does that mean that you can have multiple loans as long as it's under a certain threshold, or each individual loan has to be paid off before you can open another VA loan?
Sure. So, okay, there's two questions. So I'll answer the conventional question first, and I'll talk about the multiple loans. So if you have a house and you bought it with the VA loan with the 0% down, and there's that, you can turn that into a conventional loan. Now, the issues with conventional loans, and if anybody wants to write down this term, or this is recorded so you can come back to this part, but there's what's called the loan to value, LTV.
Right.
So the VA loan, we can do 100% loan to value when you're purchasing the house. And so we can lend on the entire value of the home.
Right.
For conventional loans, there's loan to value restrictions. Now, you don't have to have 20% equity. You can go, above 80%. But let's say, you bought the house has gone up in value a little bit. You've been paying your mortgage down, and you have, 10% equity in the house.
Right.
So now you're at a 90% loan to value, we would call it. Your loan for the conventional side, it would be the same as if you had bought that house and put it 10% down payment.
Got it.
So your loan to value at 90%, because it's still not fully 20% of equity there, you would have to pay mortgage insurance.
Okay.
And the rate's going to be a little bit higher, but that's where, I'm a visual guy. Whenever we have a very specific example of somebody doing this, I like to look at some loans side by side. And if I turn this place into a rental, let's say, maybe my mortgage payment goes up $250, making up a number.
Right.
Now I'm going to rent it for $500 more than it was. It doesn't matter. Or a lot of times when I free up the VA loan, I'm also doing it so I can buy my next home with a VA.
Right.
And usually, right, if we're doing like some investment stuff, it might not be the case, but usually as we grow, go through life, ideally everything gets better, right? We make a little bit more income, higher rank, whatever the case may be. So I'm probably buying a more expensive home for my next home. And so that $200, $250 more on the conventional loan, I don't care, because I'm going to use the VA and put nothing down on the more expensive home.
Right.
So, and then the second part, so I forget the exact amount of money, but it's $548,250, I think, right now is the county loan limit across the entire US. So that random number, some folks out in DC came up with the number from where that number comes from, just so you know, is FHFA. So not FHA, but FHFA, the Federal Housing Finance Authority. Every year they come up with what their number is going to be for the whole country. For a number of years, it was 417,000. And then over the past few years, as the economy's been growing a little bit, and homes are getting more expensive, the FHFA limit across the country has gradually increased, and this year it's 548,250. Now, what does that mean? Well, the VA for the past few years, that's why I'll just use it for right now, 2021 for the example, they've been mirroring, the VA has mirrored what FHFA has said.
Right.
So across the whole country, they're going to use 548,250. There are also what's called high balance counties. You go to Seattle, you go to San Diego, Denver's one of them. We're more expensive than most of the country. So there's limits a little bit higher, right? Some places they're into the 700,000 and 800,000 range. And all that really means is for the VA, for you to use your benefit, the VA is guaranteeing 25% of the loan, if you remember. Now this is where it gets a little confusing, but you don't have to use all of your eligibility. So let's just use easy math, which I like. Let's say the limit was 500 grand. If I bought a house in the middle of Tennessee, let's say, really, you get a pretty nice house for 250,000. I've technically only used half of my VA eligibility. I can buy another $250,000 house and still put nothing down. Now, I would have to live in that first house for a year, because remember, when you're using a VA loan, you're intending to live in there for a year.
Right.
But I literally could buy one house, flip it into rental, keep it as VA, not even change it to conventional, and buy another $250,000 house and I'm good to go. I still have my eligibility, and I didn't have to put anything down on the new house. Now, let's say I had 250,000 of eligibility left. I have my current house. What if I want to buy a $350,000 house or $1 million house or any number above that? Well, since I still have eligibility, the VA guarantees up to the 250 that I have left. Anything above that, I have to bring 25% of the difference. So in that example, if I want to buy a $350,000 house, I'd have to bring $25,000 as a down payment, right? 100,000 of the difference that I had left. Mm-hmm. Now this is where it gets a little confusing because those two houses combined, right, are only what, 600,000, but I could buy $1 million house if I had my full eligibility and put nothing down. So this is like the case by case, but if I've bought a house, here's the easier way to look at it. If you've purchased a house less than 548,000 and you used VA, you probably have eligibility left. We can check out how much you have left and then how much you can buy another house for with zero down or, you know, putting a little bit of a down payment without having to change it. Cause, you know, I'm in the mortgage industry, my team and I, we make money by doing mortgages, right? This is what we do. But I tell people all the time, like, don't get a new mortgage, right? There's costs involved if you don't have to. So a lot of times I like to avoid even doing that because higher rate, higher, you know, PMI costs, and sometimes you don't even need to do it. So.
Yeah, for sure. No, thank you. I appreciate it.
No, of course. Really good questions.
Go ahead, Kenneth.
Hey, Joey. I had a question. I have two. One to follow up what Marcelo just said. Is that 540 limit just for the single unit? Because I thought maybe there used to be different limits for different units. Like the one unit was 500, and then you scaled up from 2 to 4. And I have a follow-up. I have another question or comment after that.
Okay. Yeah. So for that question, FHFA, and you guys can, you know, it's not a fun website, but you can, you know, grab a glass of beer, a glass of wine, and Google it. But FHFA, they've got the limits all over the country. You can search for it. They do list 1, 2, 3, and 4 units with different amounts. The VA stance is they're only looking at the 1 unit column, even if it's a 4 unit. They're only going to look at the 1 unit column. But all this changed January 1st of 2020, so last year. All of it changed. They said there's no cap anymore. So up until then, there used to be a cap. So if the limit was 548,000 last year, it was a little less last year. But if that was a limit, then anything above that limit, you had to bring 25% down or 25% of the difference. But now they got away with that where you can just sky's the limit. You can go, you know, $1 million house again. So the 1 unit is all they'll use, but technically there's no limit now. So it doesn't really matter. But what you're talking about as well, that's the 2, 3, and 4 units. They are used for FHA loans and they are used for conventional loans. And just in case this helps, FHA, they're also an insurance company for the loan, for the lender. And so is, you know, a conventional loan. Fannie Mae and Freddie Mac are the big players in that world. The benefits of putting a bare minimum down payment, and I say bare minimum, VA is the best, but you know, for a conventional loan, you can put down, you know, 3 to 5% down typically. So the multiple units become important when it just minimizes the down payment that somebody's required to do. Like you can buy a 4 unit, you know, place in some parts of the country for you know, it's $1 million and use your FHA and only put 3.5% down. And so it's more important for the other types of loans. So great question there, but yeah, technically with VA getting rid of the cap, the units don't matter.
And second, it's more of a question and a comment, but you mentioned Denver not being a big VA area. Like the problem I saw, as I'm retired now, I moved to like a non-military area, and the main complaint I've heard from other Army or VA people is sometimes the appraisal will take a long time because there's only a certain amount of appraisers that are VA certified. And is it true that the VA appraisal must make the house livable, so you can't really buy a fixer-upper because their appraiser won't like certify it? I'm not really sure I'm saying that question right, but
No, great question. So on the first part, it is going to be pockets, right? Where do you live?
Right now, I'm in Allentown, Pennsylvania.
Okay.
But I just heard when I talk to other military real estate investors, like that's the issue, and especially agents, because they just are scared of the VA loan, not because of the loan itself, but because of the appraisal process will sometimes take so long because there's only certain appraisers that can do it.
So, Aaron, after this, I'll send you a few links that everybody can just kind of keep handy. So I'm clicking on this screen. I hate looking at different screens, but the VA publishes their appraisal turn times. And I would do this if I were you. And this is where I'm saying you need somebody that just knows what they're doing and is aggressive on this. I'm looking here. It says VA is guaranteeing their appraisals back within 5 business days. So I would throw this at a listing agent that's saying, I don't trust the VA loan. And I'm saying, well, the VA is guaranteeing 5 business days. Now there's no charge you can say against this, but like anything, if everybody on here served or didn't serve, we can all laugh or not laugh, right? The chain of command works, and you take something to somebody's boss, like it gets answered really fast. The VA is a benefit for the vets. They're very aggressive if these turn times are not followed. Like they'll hound that VA appraiser. So that's one thing that I would say is I would use the data. Like this is the VA's website saying that they're going to turn it back in 10 days. Like here in Denver, it's 10 business days. Like I'm shocked. All of Pennsylvania is 5 business days. So I would throw the data at them. And I forget the other part of that question you had asked about I guess, is it just the appraisals or?
No, the appraisal it's an appraisal / inspection. The house must be livable, or there must be certain qualifications. So you can't really buy a huge fixer upper like that. You could do like a live-in flip for it. It has to be some type of livable condition.
That is correct. So the house has to be habitable. So there's hot running water. There needs to be a stove to cook. There needs to be flushing, toilets. The house does need to be habitable, and it needs to be safe, right? Sometimes there's railings that are a little higher off the deck than the ordinances around the town would want. So they make you have a railing. So there are a couple hindrances like that, but nothing that I've ever seen, and I do a lot of VA loans around the country, nothing I've ever seen is an unreasonable ask. It's genuinely, you and I might not care that 6 stairs doesn't have a railing, but it probably should have a railing, right? That kind of thing. So I've never seen an unreasonable request. Now, and that's back to where I would push that back onto the realtors, that the realtor that's listing the house, most of them, I hate saying this, but we're all humans. We want to go after the path of least resistance. So that is a natural thought. But then coming back to the fact of, well, what is the problem, right? And I think if you just get a good realtor that's saying, hey, I've walked the property, I think that handrail is going to be asked for. You're probably going to have to paint this, chipping paint in the backyard here, something like that. So it shouldn't be a hindrance if they get in front of it. If we just let it be quiet and we just send the offer in, because I'll call the listing agent and say, hey, John Smith made an offer on your house at 123 Main Street. And, I'm the lender on this one. I've fully approved this person myself. Like everything's good to go. I'm looking at the property on Zillow. All the pictures look good. Are there anything weird that you didn't put pictures on? Is there a weird, outbuilding that's, about to fall apart? Is there a deck that I don't see a picture of? I'll ask them. And so that's what I'd recommend too, just to push on it before you just let them kind of decide by themselves. I get in front of it. I'm aggressive enough with, is there anything that's gonna be a problem? Like, are you afraid of anything, paint or railings or anything? So, and then I don't know if you were asking this, but the fixer upper, you can't live in the fixer upper. The VA, up until COVID happened, did allow a VA renovation loan. Mm-hmm. Basically, we would just be able to finance, improvements into the house. If you want to get new appliances, clean up the kitchen a little bit and put, 30 grand of work into this thing. We were able to do that. Now the problem is the VA wants to keep their turn times accurate and not clog the system. And those types of appraisals just are more cumbersome. And so they stopped that program. Ideally, they turn that back on. But if you Google, VA renovation, I mean, there are some pretty good programs for that as well. Ideally, they open that back up this year.
Yeah. Thank you, Joey. Thank you so much, man.
Of course.
Man, you provided so much information. This is recorded, so this should go on my YouTube feed so that anybody can watch it. Man, just a lot of great information, man. I'm so happy to shoot my first guest for the Last Line Defense.
I appreciate it, and I'm definitely honored to help out. And by all means, you guys want to give me a call, like I said, feel free to give me a call, text, or anything. And if anything, I just rather you guys have the right information, because that's what's important.
Yeah, please put your information in the chat, and I know we saw it on the slide too, but put your information in the chat, and everybody can connect with you afterwards. So, all right. So usually, and this is the first one, but usually I would start with asking everybody, where you at, where you live at, and what you're about, what you're trying to do in real estate. But I won't do that for the first time. I'll let it go for this time. We'll do it next week. But I do want to do what we call roll call. And roll call is basically me plugging in different entities so people can, if you want to learn more about certain things in real estate, I would, redirect you to these people. So for instance, for military, if you want to know more about military affiliated real estate groups, I would suggest Active Duty Passive Income, ADPI. They have a podcast as well. Look them up. I would say the War Room Mastermind group, me and Kenneth are part of. Love it. Great information. White Feathers, they're based out of California, but they're a really good group. And finally, Seven Figure Flipping with Bill Allen. For civilians, the biggest forum in the world, Bigger Pockets, always great. And there's so many more great groups out here for multifamily and single family. So if you guys have any information, you want to learn more, please get with me and I'll provide it for you. Also, if you want to learn more about, if you're a passive investor, meaning that you don't have the time to really invest in real estate, but you still want to invest in real estate, please call me afterwards. We can have a sit down chat, push in my calendar link, and we can have a talk afterwards. Okay, so Joey, you're free. If you want to stick around, we're going to breakout rooms. If not, man, thank you so much.
Of course, and I'm probably going to run, but I did put those two websites in the chat, the VA appraisal